there is continued active interest from investors in India, new investment. At the same time, legacy investors have been using the extremely buoyant Indian stock market until recently to generate profits on their old investments, and some of them going into the hands of portfolio investors from PE and VC investors. So that is why on a net basis, you see very little change. At the same time, overall investments this year, both FDI and FII, you can look at the RBI data, are on the lower side. But it has been very well offset by improved performance both with respect to remittances, for which we don't have the data here, as well as good performance on the export front. And that is why the current account deficit is small, which therefore financing it continues to pose no challenges as far as India is concerned. Notwithstanding, and let me remind our audience here today that the trend in FDI numbers is not peculiar or unique to India. The trend in FDI numbers is very much related to the global phenomena where onshoring and friendshoring, in fact, even friendshoring is giving way to onshoring and FDI flows, and we have discussed this in the economic survey as well. So that is why India's current account deficit, where it is today between 1 and 1.2% of GDP for the current financial year, is eminently in the comfort zone, given the kind of uncertainties and risk aversion that will continue to be with us when it comes to FDI flows for the coming financial year as well. And FPI flows, because of profit taking, the Indian stock market went almost parabolic between July 24 and October 2024, and those parabolic gains are now currently being unwound in the marketplace, and part of it is either due to or because either due to the FPI flows or FPI outflows or a consequence of this. So there is a two-way relationship between the two, and as we speak today, we notice that the US stock market is significantly down, and the Indian market today has reflected that as well. But as a recent commentator, one of the long-standing observers of the Indian market, Mr. Chris Wood of Jefferies, earlier he used to be in CLSA, and he has said that from a long-term perspective, he continues to remain very positive on Indian stocks, and the growth numbers we have seen, including the revisions to previous years, validates the point he makes, which is about the long-term attractiveness of the Indian market at this stage, notwithstanding recent volatility, which is partly driven by global developments and also partly driven by stellar gains of the previous years.